Why has India bought over 900 million ounces in the last 5 years, more than the LBMA has in total they've bought in the last 5 years? And now Russia accumulating it for strategic purposes by the state, the first country to say that. Well, all of these things were happening when you and I were talking over the last year or two. But now someone within the Trump administration, thank goodness, is wise enough, I believe, to have said, listen, if we don't start doing what the rest of the world is doing, we're in trouble. And this huge rush of both gold and silver into the COMEX, which is standing for delivery, which is way different than anything we've ever seen, goes to tell you that the people at the highest level who know what's coming.
Silver's smaller market cap makes it 2 to 3 times more volatile than gold, amplifying gains during bull markets and driving its dramatic price fluctuations. Professional forecasts for silver converge around $40 per ounce by summer 2025, representing a 40% gain from current levels. More ambitious projections suggest $50 by September 2025, if industrial demand accelerates alongside investment flows. Well-known authority in the precious metals industry, AndySchectman, notes silver's rare surge marking only its third time at that level. A sustained close above $35 could trigger a major breakout and attract hedge fund interest. Meanwhile, Schectman highlights severe supply stress, citing LBMA's 8-week delivery delays and a record silver delivery on COMEX. He reveals how China, India, and now Russia are stockpiling silver off-market, hinting at a strategic pivot ahead of monetary upheaval. India's silver production has increased 20-fold from a meager 47 tons in 2002 to 700 tons now, thanks to Hindustan Zinc's disinvestment. According to the World Silver Survey 2023, silver production has nearly doubled over the past decade, rising to 22.5 million ounces in 2024 from 12 million ounces in 2012. While reflecting on the metals, Schectman views silver as an asymmetric asset, characterized by a low downside and a high upside, much like early Bitcoin. With the dollar down 9% and silver up over 40% this year, he warns of deepening monetary and fiscal instability. The dollar has already lost approximately 90% of its purchasing power since 1976, when measured against real goods and services. During this period, silver has acted as a reliable store of value despite its volatility. Silver typically outperforms when the dollar enters sustained downtrends, as evidenced by the 2009 to 2011 period when silver rallied from under $10 to nearly $50 as the dollar weakened following the global financial crisis. Ultimately, Schectman underscores that institutions are aggressively accumulating physical metals while retail investors lag, often selling under financial stress. Before we dive into AndySchectman's sharp insights from his latest interview with Robert Kiyosaki, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Yeah, it's even a little higher. It's above 36 right now. It is 36.60 as we speak. It touched 37 the other day. It's the third time in history that it's been this high. There's been 7 attempts to break 35 since 2011. They've all failed. This is the first that hasn't. If it closes the month of June above 35, it's incredibly significant. I believe you'll get the hedge funds jumping in at that point. From a technical standpoint, that's huge. We've seen the weekly close above it, in fact, above 36. With all of the Fed announcements like the non-farm payroll and the interest rate announcement that's coming up in a couple of weeks where they're probably thinking of keeping the rates where they are. These are all big things leading up to the end of the month. We want to see it close above 35 or 36, but ultimately, the only word that comes to my mind, Robert, is asymmetric. Asymmetrical in this respect means super low downside and amazingly high upside. There aren't many assets that you can say that about. You could have said that about Bitcoin when it was $100 a coin, very low downside, amazing upside, looking back at it in retrospect. So, but I think that's where we are with silver right now. The dollar's down 9% this year. Silver is up over 40%. And so it's an environment where you're not buying gold and silver to become wealthy. You're buying it because it is wealth. If you own enough of it, yes, in those terms, you would be wealthy. Yeah. But I think this is something that's very, very important to understand. You're the one who I credit with. I've said this comment 1,000 times. You learn from Buckminster Fuller. You can't get out of the way of what you never see coming. And that's a very big problem here. People don't see the problem with the dollar that is coming. The de-dollarization trend is continuing, and that leads to a whole slew of other problems. At the same time, the treasury demand is falling, which leads to higher interest rates, which leads to a slowing economy, which leads to all sorts of other problems. But when I look at silver, I see some very interesting things. I see the LBMA London Bullion Metals Association, which is a T+1 settlement system, meaning T is a trade day plus 1 to settle. Your metal should be delivered to you or moving on the third day. The LBMA says, no, we're so backed up with delivery requests, it's 8 weeks. Really? T plus 8 weeks when I'm expecting my metal in 3 days. What if I own
they can't deliver? They cannot deliver for 8 weeks.
For 8 weeks. Imagine you own the Kiyosaki jewelry empire and you're making jewelry all around the world and you source gold and silver bars in London so that when you need to fabricate your metal at the call of a snap of a hat, in 3 days, your metal's moving to your refinery where you're making this stuff. Robert, I'm so sorry, man. We're at 8 weeks because the Bank of England says there's not enough in the way of trucks or manpower. Really? The Bank of England doesn't have enough trucks to move my gold and silver. That's a problem. That's a default. Or whether we're seeing in the United States where the largest single delivery of silver ever in the history of the COMEX happened in May. Or whether we're seeing China, which is the second largest producer of silver in the world, literally buying silver from all the miners directly in Peru, which disintermediates the marketplace. They're buying what's called doré and concentrate. Doré are the bars the miners make that are crudely refined, maybe 30 or 40%, before they send them to a refiner to be purified. And concentrate is a sludge, liquid sludge byproduct of that. They're buying all of that stuff in Peru, right from the miners, and then sending it back to China to be refined. They're paying double what the West will pay, but this accumulation is totally opaque. How much did they buy? What effect does it have on the price? On the supply, nobody knows. But this is coming from the second largest producer of silver in the world. Why are they doing this? Why has India bought over 900 million ounces in the last 5 years, more than the LBMA has in total? They've bought in the last 5 years, and now Russia, accumulating it for strategic purposes by the state, the first country to say that. Well, all of these things were happening when you and I were talking over the last year or two, but now someone within the Trump administration, thank goodness, is wise enough, I believe, to have said, listen, if we don't start doing what the rest of the world is doing, we're in trouble. And this huge rush of both gold and silver into the COMEX, which is standing for delivery, which is way different than anything we've ever seen, goes to tell you that the people at the highest level who know what's coming are favoring physical possession in their own hands rather than playing the game of paper-long contract, either in London or the United States. So just by that very fact that these people are accumulating this much, which is an anomaly. It's 5 feet of snow in Phoenix in July. This doesn't happen. It's happening. And that should tell everyone that all the things that you've been talking about for a very long time are now starting to manifest at the highest levels. And unfortunately, to your experience, we're still a rotation or two behind that level down here at the retail level. So a lot of these retail, especially local coin shops, they've gotten a lot of people that come in and say, look, I need to sell, maybe to put food on the table at record high credit card debt and lowest savings rates in forever. Or maybe I just need to, because gold and silver are high, I'm going to get out. And these people, unfortunately, these shops just don't have the pricing power to be as competitive as you might like at this point. I'm providing you liquidity. That may change very quickly when the demand goes shoot and everyone's buying. Yeah, sure. They'll buy it back and turn around and sell it at a profit. And that premium that you'll get will be much better. Unfortunately, you are just a victim of timing, in my opinion, more than anything.
The silver market is currently experiencing a significant shift driven by macroeconomic developments that have created a distinctive pricing environment. According to the latest data from the Shanghai metal market, several key indicators are shaping the trajectory of the precious metal. Seasoned expert AndySchectman explains that for over 30 years, silver products such as American Eagles have carried consistent premiums just above the spot price. This changed in 2020 when the pandemic triggered supply shortages and record demand, pushing premiums above $11. Today, premiums are unusually low due to weak retail demand, as investors chase riskier assets such as tech stocks and cryptocurrencies. Meanwhile, institutional players are quietly taking record physical deliveries on COMEX. Schectman believes this disconnect marks a bottom in the cycle, with premiums likely to surge once retail wakes up. The 2025 movement has specifically targeted March 31st as Silver Squeeze Day, with organized buying across social media platforms and precious metals forums. Participants have been encouraged to purchase physical silver from both local coin shops and online dealers to maximize market impact. Understanding gold and silver market trends and investment insights provides valuable context for those following this movement. Let's get back to the interview.
Most of my career, which is 35 years now, almost 36 years, Robert, whatever product you would be selling, you would receive a premium, a excess premium above the spot price, above the melt value. Whatever the product was, some products would have a higher premium than others, but there was always a premium. We can use Silver Eagles as an example, and I can show you what you're really getting at here using Silver Eagles. So let's just pretend that you called me November 2019 and said, I'd like to buy a mint box of Silver Eagles, 500, 1 ounce, brand new United States Silver Eagles. You say, Andy, what will you sell it to me for? And if I should need to sell it back, what will you buy it for? I would have said to you something like this. Now, this would have been the same answer I would have given you for pretty darn well near 30 plus years. And I would have said, sure, Robert, I will sell it to you for $3.29 over the price of silver. I'll buy it back from you for $2.79 over the price of silver. That spread, 279 to 329, 60 cents or so, would have been our commission per coin. So $300 on a mint box. That would have been for almost my entire career. That would have been standard. Now you say, okay, I'll do that. In fact, I want to get $100,000 worth. Sure. This is November 2019. You call me back 6 months later, March, April, May 2020, the pandemic had hit. Andy, the pandemic really affected my business. I need to sell those mint boxes. You told me that you would pay me $2.79 over. Is that still good? I'd say, no, it's not. But how about $11 over? Because the demand was so high for the price of silver, and excuse me, for silver American Eagles, that in 6 months, the premium went from $2.79 over bid price to over $11 over the price of silver bid price, where it stood for most of the last, or 2020, 2021, 2022, 2023. And then things changed. They changed in a very substantive way. And that's going to get us to where we are now. So at least in terms of looking at where we were and where we were before that, you always would receive a premium above spot, but a small one. Then came the pandemic. The premiums went much higher. But let's discuss, before I get to where we are today, how those premiums are derived. There's about 5 or 6 massive primary distributors. These are the distributors that work directly with the mints and the refineries globally. These are the companies that some of them are publicly traded. They spend billions with a B of dollars buying and selling precious metals every year from the global mints: South Africa, United Kingdom, Australia, Canada, and the United States, and Austria, the 6 primary mints. And their job is to provide liquidity to the market, to be a market maker. So let's go back to the pandemic. These primary distributors who have agreements with, let's say, the United States Mint, they take everything the mint will give them because there's so much demand. The mint says, we're out of product. That's it, no more product. These primary distributors then become the market makers moving forward. They are the ones that set the premiums either to the upside or to the downside. There's so much demand in 2020 and 2021 that they say, we'll pay anyone that wants to send us their Silver Eagles $11 over the price of silver, but we're selling them at 12 or 13 or 14 over. Now that spread, which was much bigger than normal, was big because you can't hedge the spread or the premium. You can only hedge the metal content. So anyways, first and foremost, your guy in Arizona really is not the one who sets the premium. It's whoever he's going to sell it to, the big primary distributors. They're the ones who set the premium. What's interesting about right now, maybe the most interesting thing about the environment we find ourselves in right now, and why the premiums are so low, is that really starting in 2024, we had the rise of NVIDIA the accentuation of the Mag 7, the huge demand for cryptocurrencies, Bitcoin, you've talked about that for a long time. And so the American public did this 180 during the pandemic and the banking crisis from risk off to risk on. And we saw a lot of selling and non-participation in the metals market. So the premiums went down. But here's where it gets really interesting. Where we are right now is a very unique situation because you still have the American public who has yet to really take your advice, Robert. They're beginning to. They're waking up. But this is simultaneously happening when the COMEX market is experiencing the largest deliveries that they've ever had in the history of the market. In fact, the May delivery contract for COMEX, where the prices are set globally, delivered the largest amount of gold and silver in the history of the COMEX ever. The biggest money up here, they're standing for delivery. They're the ones pushing the price higher. The public hasn't. The public has a very tiny, if any, allocation to precious metals. In fact, Rick Rule says 0.5% across the entire United States, from Joe and Jane six-pack to the Harvard Endowment Fund in terms of allocation to metals. So what that means is there's more physical metal available on the street than the dealers have the ability to sell. And so as more people come in, the bid prices are getting lower and lower and lower. At the same time, the people at the top are draining the world's exchanges. It's just a matter of time. So anyways, all I'm trying to simply say is this. Until 2020, premiums were almost consistent forever. You pay a few percent over spot when you buy, you get a couple percent less, but still over the price of spot when you sell. Since 2020, everything's gone crazy, whether it be premiums that are higher than anything I've ever seen in my career, to where we are right now. And in defense of this gentleman, I will say industry-wide, the premiums are lower than I've ever seen, ever in my career. And it's not us, it's the people one step above us, the primary distributors. That's really as honest of an answer as I can give you, is that when I take in $1 million worth of gold and silver, if I can sell it to my clients, great. But if I'm a coin shop in Arizona, I may not have that ability and I may not have that liquidity. So I have to turn around and sell it to a company like me or a company above me, the primary distributor, and the bid prices are going to be lower because there's so much excess supply built up because the public has been chasing profit instead of realizing what the biggest money in the world is doing, standing for physical delivery. And it's a cycle, and we're at the bottom end of the cycle now. I would expect to see premiums move much higher industry-wide as there's more awakening in the American public who finally start to say, you know, Robert Kiyosaki was right a long time ago. I should have been buying silver and gold. And when that happens, just like that, the premiums will flip.
Silver's role in the renewable energy transition creates structural demand growth unmatched by current supply projections. Continued high interest rates increase the opportunity cost of holding non-yielding assets, such as silver. Are you prepared to act before the mainstream catches on, or will this window close before you make your move? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.